What if the biggest clue about where crypto goes next isn't coming from price charts at all? While fear is spreading across the market, Bitcoin just saw a major flush of selling from key holders. Billions of dollars in options are about to expire. Traders are debating whether this is the beginning of a deeper correction or the setup of a powerful reversal. At the same time, Ripple is expanding RLUSD into Japan. XRP is showing up in new tokenization discussions. Stablecoin adoption continues accelerating, and lawmakers are signaling that crypto regulation may finally be approaching a turning point. So, are we witnessing the start of a larger breakdown? Or are we watching the exact type of environment that historically forms major bottoms? Let's break it all down. Nothing in this video is financial advice. Always do your own research before making any investment decisions. Welcome back to Ledger Pulse, your source for the biggest developments shaping crypto, digital assets, blockchain infrastructure, and the future of finance. Today's episode is packed because we're seeing a fascinating disconnect. Price action looks weak, sentiment looks terrible, but beneath the surface, infrastructure, regulation, and adoption continue moving forward. Let's start with the market itself. One of the biggest headlines comes from on-chain analytics platform Santiment. According to their data, Bitcoin briefly fell below the $60,000 level for the first time in months. The interesting part wasn't just the price drop, it's who was selling. Santiment reported that wallets holding between 10 and 10,000 Bitcoin sold more than 45,000 Bitcoin over roughly a week. That's a substantial amount of supply entering the market. Whenever large holders begin distributing coins, it naturally creates additional downward pressure on price. When retail investors see headlines like this, the immediate assumption is usually, the smart money knows something. But markets aren't always that simple. Large holders take profits. Funds rebalance portfolios. Institutions manage risk. Whales move assets between custodians. And sometimes, major holders simply reduce exposure after large rallies. The important question isn't whether some Bitcoin was sold. The important question is what happens after that selling. Can buyers absorb it? Historically, some of the strongest rallies begin after periods where excess selling gets flushed out of the market. And that leads us directly to our next story. Popular analyst Michael Vanderpop believes recent price action may actually be constructive. His argument is based on something traders call a liquidity sweep. In simple terms, markets often move to areas where lots of stop losses are sitting. Price drops, weak hands panic, stop losses get triggered, leverage gets wiped out. Then the market reverses. It's one of the oldest patterns in trading. Vanderpop believes Bitcoin may have just experienced one of those events, but he points to something even more important, the 200-week moving average. For people unfamiliar with technical analysis, think of the 200-week moving average as one of the most respected long-term trend indicators in financial markets. Historically, Bitcoin spending time above this level has often signaled strength. According to his view, maintaining that structure could support another move higher over time. Whether you agree or disagree with the analysis, the larger point is worth understanding. Markets rarely reward the majority. When fear becomes overwhelming, opportunities often begin appearing. When euphoria becomes overwhelming, risks often begin growing. That's not just crypto, that's human psychology. And speaking of psychology, Vanderpop also shared a reminder that perfectly captures investor behavior. In 2018, many people believed Bitcoin was heading toward 1,200. Instead, the market eventually recovered. In 2022, many expected Bitcoin to fall toward 10,000 after dropping to around 16,000. Again, the market recovered. Today, many investors are convinced significantly lower prices are inevitable. Maybe they're right, maybe they're wrong, but history shows something interesting. The majority usually becomes the most confident near major turning points. Think about it. At market tops, people believe prices can only go higher. At market bottoms, people believe prices can only go lower. Reality usually lands somewhere in between. This doesn't mean Bitcoin can't fall further. It absolutely can. But it does mean investors should be careful about becoming emotionally attached to any single outcome. Markets have a habit of surprising everyone. Another major event traders are watching is the upcoming Bitcoin options expiration. Roughly 10 billion worth of Bitcoin options are expected to expire. For those unfamiliar with options, think of them as contracts that allow traders to speculate on future price movements. When large expirations occur, volatility often increases. Why? Because traders adjust positions. Market makers hedge risk. institutions reposition portfolios, and liquidity can move rapidly. Now, it's important not to assume every option's expiration automatically causes a crash. Sometimes nothing dramatic happens at all. Other times, it becomes the catalyst for a large move. The key takeaway is that a significant amount of money is tied to these contracts, which means market participants will be paying very close attention. If volatility increases over the coming days, this could be one reason why. While traders focus on short-term price movements, Ripple continues expanding its stablecoin strategy. Ripple announced that RLUSD is now officially available in Japan, following approval from Japanese regulators. The launch is taking place through Ripple's partnership with SBI Group, one of the most influential financial organizations in Japan. This matters because Japan is often viewed as one of the more mature and regulated digital asset markets in the world. When a stablecoin gains regulatory acceptance in a major financial jurisdiction, it creates another piece of infrastructure that businesses can potentially build on. For the average person, stablecoins can sound boring, but they're becoming one of the most important sectors in crypto because they solve a practical problem. People want blockchain speed and efficiency without cryptocurrency volatility. Stablecoins provide that bridge. And governments, banks, payment companies, and financial institutions increasingly appear interested in that model. The bigger picture here isn't just RLUSD. It's the continued expansion of regulated digital dollars around the world. Another interesting update involves where RLUSD is actually being used. Recent data shows RLUSD supply on the XRP ledger has grown significantly and is now approaching the amount circulating on Ethereum. For a long time, most stablecoin activity happened on Ethereum. That's where developers built. That's where liquidity existed. That's where users congregated. But we're beginning to see activity spread across multiple ecosystems. This trend matters because it suggests blockchain networks are increasingly competing for real-world utility rather than speculation alone. Users want faster settlement, lower fees, better efficiency, and reliable infrastructure. The more stablecoin activity that occurs on a network, the more valuable that network's infrastructure potentially becomes. Again, this isn't about hype, it's about usage. And usage is ultimately what long-term adoption depends on. Another development this week came from a proposal discussed within the United Kingdom. The proposal referenced the XRP ledger as potential infrastructure for managing climate-linked financial instruments. Now, it's important to clarify something. That does not mean XRP has been officially selected. It does not mean governments are suddenly adopting XRP tomorrow. But it does illustrate something important. The XRP ledger continues appearing in conversations involving tokenization, settlement systems, record keeping, audit trails, and financial infrastructure. That's notable because tokenization is becoming one of the largest trends in finance. Imagine stocks, bonds, real estate, commodities, and other assets represented digitally on blockchain networks. Many of the world's largest financial institutions are already exploring this concept. The race isn't simply about creating digital assets. It's about building the infrastructure that moves those assets efficiently, and XRP Ledger continues showing up in that discussion. One of the biggest stories in Washington this week came from comments suggesting the Clarity Act has bipartisan support. For years, one of the biggest challenges facing the crypto industry has been uncertainty. Companies often don't know which rules apply. Developers face unclear frameworks. Businesses struggle to plan long-term strategies. The Clarity Act aims to provide more structure regarding how digital assets are classified and regulated. No piece of legislation solves every problem, and the political process is never simple. But even the possibility of clearer rules is significant. Markets generally prefer certainty. Investors prefer certainty. Businesses prefer certainty. The easier it becomes for larger institutions to participate. That's one reason regulatory developments remain one of the most important stories to watch. Finally, let's end with something that perfectly summarizes current sentiment. Dave Portnoy recently joked that he's holding his Bitcoin all the way to zero. The comment was humorous, but it also reflects the frustration many investors feel during corrections. When markets are falling, confidence disappears. Every headline feels negative. Every rally gets doubted. Every prediction becomes more bearish. Ironically, those environments often create the conditions where recoveries eventually begin. Again, that doesn't guarantee a recovery tomorrow, but investor sentiment tends to swing between extremes: fear and greed, panic and euphoria, despair and optimism. The challenge is learning to recognize those emotional cycles without getting trapped by them. When we step back and connect all of today's stories, a larger picture begins to emerge. Bitcoin is facing selling pressure. A massive options expiration is approaching. Market sentiment remains fragile. But underneath the surface, stablecoin adoption is expanding. RLUSD is growing. Ripple is entering new markets. Tokenization conversations continue accelerating. And regulatory clarity appears closer than it has in years. That's why this period is so interesting. Price action tells one story. Infrastructure tells another. History shows that major shifts often begin long before the majority notices them. The question isn't whether markets are volatile. They always are. The question is whether the foundations being built today will matter years from now. And judging by the pace of development we're seeing across the industry, that answer may become increasingly difficult to ignore. If you enjoyed today's breakdown, make sure to like the video, subscribe, and turn on notifications so you don't miss future updates. And let me know in the comments. Do you think this is a temporary correction before the next major move higher? Or do you believe crypto still has another major washout ahead? I'd love to hear your thoughts. Thanks for watching, and I'll see you in the next episode.